Stablecoin issuer Tether kept its funds in 4 banks and 2 investment management firms, as well as 2 gold depositories and a gold broker, as well as its own sister company, Bitfinex, in March of 2021, documents obtained by CoinDesk show. Under the New York State Freedom of Information laws, CoinDesk requested documents detailing the backing behind the USDT stablecoin issued by Tether after they published their first documents laying out what was in the reserves, which at the time was a whole lot of commercial paper, among other things. Times have now changed, and it looks like that's no longer the case. But honestly, this is still a pretty fascinating snapshot at what is behind one of arguably the most systemically important tokens in the world of cryptocurrency today. Well, there's a lot of numbers in here, and honestly, I appreciate this is a little bit hard to figure out what to make of it. What jumped out at you?
Yeah, just for the context for this story, Tether, the largest stablecoin by market cap, and has been for quite some time, probably ever, I guess, maybe go back to the early days of stablecoins. There might have been something that beat it out. But Tether has been the most important stablecoin out there. It's recently become like the de facto trading pair for almost everything. So its basis, meaning its reserves, are of the utmost importance for crypto. If we don't have good understandings of what its reserves are, well, then we could get ourselves in a giant pickle where a lot of the market is not supported correctly. And so that was the idea behind this entire move by the CoinDesk editorial team, including Nicholas Day, who ran with this, got a Freedom of Information request approved, pulled this information from a lawsuit between the state of New York, I believe, and Tether itself. Now we have that information, and it's been published, and we can have a nice insight shot of what is going on inside Tether during this March 2021 period. So we don't know exactly what's happening now necessarily, though Tether does publish some of its information here and there. And we don't necessarily have all the historical information for Tether for all of its months of operating over time. But we do have this information that does give us more confidence, I'd say, in Tether. And it also gives better insights into what these kind of markets could look like in the future. So to your point, Adam, there's a few different things that are included in this. Basically, the idea for the stablecoin is we want to create a really safe reserve that's also highly liquid. So we have like a bunch of stable coins in a bucket. We want to pair it with something that I can immediately sell into the market. And when I sell it, the price of that asset is not going to drop. So that's why they have a lot of commercial paper in here. The one thing that is notable, I'd say, besides the gold information, which we actually knew about from a few weeks ago, is the Chinese banks are involved with this, with both securities and commercial paper. Bloomberg ran with that story. I think just maybe the interest here is probably on the political side of things, right? The fact that, Tether as an international company and also operating not really in the U.S. because it needs to operate outside because of the SEC, but because crypto is has a large presence in the U.S. I think the Chinese angle could be interesting here to politicians looking at stable coins. Overall, that's my only takeaway from it. I thought this was actually a pretty good look for Tether and also a great follow-up on CoinDesk. Zach, throw it up to you.
Yeah, transparency is good, and Tether's belated embrace of transparency is also good, but it's been a long time coming. They've been long-time antagonists with those seeking more transparent information about what is backing the USDT stablecoin, because it is systemically important to the crypto industry. So the fact that they're kind of embracing this transparency, advancing toward less risky assets, in terms of what's backing these stablecoins is fantastic news. It's fantastic to see. But it's rooted in a long sort of distrust of those asking for those things to be more transparent. And so the fact that Tether is sort of, taking to Twitter and other platforms to say, hey, for the benefit of our industry, these documents are now public. There's a bit of irony in it, but overall the sentiment is right. It is good that these things are known so that people can assess their risks much more capably than they had been able to in the past. Because if for you, like the assets backing Tether are overly risky, you probably don't want to have exposure to that, right? Like you want to be able to make an informed decision. And I think that's what transparency here, certainly induced by journalists such as Nick Day, ultimately will serve the market better for the long haul. So it's good to see this stuff come to light. It does provide a snapshot and it does really show how far Tether has come from some of those initial doubts as to their banking relationships and into the asset mix behind the stablecoins itself. I saw Jen. I'm going to toss it to her.
I have two questions, Adam, for you. So the first is, if this is a good look for Tether, why was there resistance to release this data in the first place? It sounds like there was some back and forth that kind of spanned a couple of years. And second, USDT depegged yesterday. I don't know if it was on the news or if it came just a little bit before the news, but is there any correlation between this news and USDT depegging, or was it just a coincidence?
So again, I have no real knowledge about why the depegging happened yesterday. These things do happen, and it was not a significant depegging. I think it was like a fraction of a penny that we actually saw a drop off of the core rate. So again, like a big move to sell a ton of that stuff can push down prices in that sort of way. That isn't particularly alarming to me. I think to your larger question about why is this information secret? Why is that valuable for it to be secret? So full disclosure, I was involved with the early specification of Tether back in the spring of 2014, and I decided not to move forward with it among the other people who I was working with at the time, out of concerns that there would be risk associated with affiliation with it. So I have no contracts. But anyways, I was kind of there at the very beginning. At the very beginning, and for many years, I think there were likely significant concerns that any information that leaked would create attractive targets for governments to then go after those banks. So I think that there is real value to secrecy around both the jurisdictions that you're in. I remember in the very, very early days with Bitfinex, one of the things that sort of defined them and allowed them to be a really kind of useful exchange was that they had a banking relationship in Macau, which is sort of the quasi-regulated, portion of China that's typically gambling, where a lot of like interchange between, Chinese currency and non-Chinese currencies happens. So that banking relationship was a pivotal one early on. It's not mentioned in this, so it doesn't seem like it's true anymore. They mentioned one Singapore bank and three different Bahamian institutions, one of which is Deltec, who's a somewhat big player in kind of this space. But yeah, it's so I think that there is value to keeping this information secret, but as these things have become more mature, the reasons to keep it secret have kind of dropped away, because it's not like if somebody wanted to find Tether, like you just can't hide this much money. So again, the people who you would want to keep this information from, who might then try to, seize it or go after that bank or something like that, they kind of already have that information. So it does make sense they would stop fighting at this point and actually kind of reveal this information. But I do think that there were valid reasons early on. Will?
I think this information had to go public at some point. Like they filed to block it, but CoinDesk was able to get around that. And to Jen, your point about like the depegging event yesterday, if you look at the bottom of this CoinDesk article, there's some explanations about the timing when this event was reported. There was a lot of chatter on Twitter, as people like to do, saying that information was leaked prior, causing a depegging event, or possibly even someone trading against this news. But CoinDesk didn't even receive the information by the time Tether was already depegging. So if you look at the timeline, it's just incoherent of an explanation. Now to the broader question here, which I love Adam's explanation, like why not protect your banking partners, right? Like this is only becoming a larger national security issue for a lot of different countries out there. I mean, we've seen it spoken on Capitol Hill time and time again. And then also just as like an economic investment, you want to protect who your banking partners are, because you want to be able to make sure that you have a liquid investment that you can also earn a yield on top of. Going back to the first point there, we saw that with USDC, right? Where USDC, the Circle Consortium, had a very public partnership with Signature, and then that became under target under what is now called choke point 2.0, right? So we've been talking about that for a while. If politicians know where these banking partners are, they can sort of go after them. Zach?
Yeah, I guess, those are good points. That's a very good, sort of macro perspective to share here as to why some of this information is privileged. But I think overall, just like the soundness of these assets and the soundness of these relationships, the market is entitled to that knowledge. And I think that's why ultimately this transparency serves the market. But yeah, people have differences of opinion on that for sure, even today. And Tether remains sort of a lightning rod within the crypto community itself. Adam, sorry.
Yeah, just real quick. I think there's a really valid conversation to have about business model with these types of projects, because these types of projects, the way that they make their money, it's not by charging users to convert into stablecoins. It's by taking that backing and making money off of it, which is inherently a risky asset, whether you're talking about treasuries or you're talking about, you're talking even about dollars stored in a bank account. So I think that's really the challenge, is even if you were going to keep everything in cash and not make any money off of it except for the interest you earn in the bank account, that still isn't really safe. So what what do you do? And how do you make money without creating these types of risks? I don't really answer that question, but I think it's a really important one.